Good morning. Thank you for joining today's daily webinar. If you've been itching to tap into real estate with retirement funds, but did not know it was possible or legal, you are in the right place. Today's webinar is going to answer one of the most exciting questions we get from investors. Can you really use a solo 401k to invest in real estate? The short answer is yes. And we're going to break it all down in today's session for you. As always, go ahead and shoot over any questions you have during the live webinar, and we'll answer those questions as they come in, and then we'll pick back up discussing today's topic, which is, can I use a solo 401k to invest in real estate? Please like this video, subscribe to our channel so that you get notifications when we go live. We typically go live at least once a day, many times, a couple times a day. So go ahead and ask any questions regarding self-directed IRAs, solo 401k plans, or any other type of 401k. It doesn't have to be surrounding today's topic. It can be any type of question related to retirement accounts. Well, here's what we're going to break down in today's session. What kind of real estate investments are allowed in a solo 401k plan? Well, there are various types of physical real estate that may be held in a solo 401k plan. Physical real estate, such as rental properties, it can be farmland, commercial and residential real estate. It can even be real estate private equity syndicates, where you invest a solo 401k in a private fund, and then that private fund invests in real estate. Those are the types of real estate that can be held in a solo 401k plan. Now, how to avoid IRS prohibited transaction regulations, which can blow up your solo 401k plan if the regulations are not followed. When you invest a solo 401k, let's say in a rental property, one, it cannot be a rental property that you already personally own or your family members own, such as your spouse, children, parents, for example. Nor can you sell or exchange a property that you own already, whether personally or through your business or any of those family members I mentioned. So in short, the solo 401k cannot buy a property owned by you or certain family members or your business. Likewise, you can never sell property owned by the solo 401k to yourself either, or certain family members, or even your own business. Looks like we've got a question live on the air here. Let's go ahead and pause with today's topic, and then we'll come back and pick back up again on today's topic, which is, can I use a solo 401k to invest in real estate? And again, please like today's video, subscribe to our channel so that you get notifications whenever we go live. And go ahead and shoot over any questions you have during the live webinar. And again, it doesn't have to be surrounding this topic. And we'll pause and answer those questions as they come in. So we got a question here from Luke. I would like to do a mega backdoor. I already have a solo 401k and a Roth solo 401k with E-Trade. can I open a new solo 401k for my after-tax contribution and then convert the funds to my Roth? So if you already have a solo, I'm going to assume that your question surrounds the fact that you already have a solo 401k with my solo 401k financial, number one. So that means that we are the solo 401k provider. Number two, that you are using E-Trade to hold the solo 401k funds for the solo 401k plan offered by my solo 401k financial, which allows for the mega backdoor Roth strategy. Third, I'm going to assume that you already have brokerage accounts at E-Trade for the solo 401k offered by my solo 401k financial. That is, you already have a pre-tax brokerage account. You also already have the Roth solo 401k brokerage account, but you need to open up the voluntary after-tax brokerage account. But you need to make sure you open up a separate brokerage account at E-Trade to hold those voluntary after-tax solo 401k contributions, and then you can convert those contributions to the Roth solo 401k brokerage account, or you can convert them to a Roth IRA. You get to choose where you want to convert those funds, whether to a Roth IRA or to the Roth solo 401k. All right, looks like we've got a question here from Steve. Let's take a look at that here. On solo 401k with the objective of doing a mega backdoor Roth, is best strategy to put all money in the after-tax contribution to get 70,000 into a Roth IRA, as opposed to putting money in the pre-tax employer accounts? Great question. So the quick answer is that if you're trying to maximize your tax-free retirement money, that is, get money into a Roth solo 401k so that it grows tax-free. Therefore, you will not have to pay taxes once you start taking distributions from that plan, typically once you retire, and you've had that Roth solo 401k for both 5 years, and you are age 59 and a half. So the overall contribution limit is $70,000 for 2025, for example. That means that you cannot contribute more than $70,000 to that solo 401k if you're under age 50 for 2025. That 70,000, it can be allocated usually in various ways. One method is to treat it all as a voluntary after-tax solo 401k contribution and then immediately convert it to the Roth IRA or the Roth solo 401k. That means you cannot contribute anymore. Now, another example based on that $70,000 amount, some clients will do some pre-tax contributions, and then they'll do the remaining up to $70,000 as a voluntary after-tax solo 401k contribution and then convert it to the Roth solo 401k or Roth IRA. So in short, you only have $70,000 to work with, and you can divvy it up into pre-tax or all into voluntary after-tax, for example. You just can't go over that overall $70,000 limit. Of course, whether you'd contribute any method I just mentioned, you need to have the necessary earned income from self-employment to justify that contribution, meaning you need to have enough earned income from your self-employment activity in order to maximize that $70,000 contribution, whether it's a mixture of pre-tax, Roth, voluntary after-tax, or just voluntary after-tax, for example, and you have to base those contributions solely on that earned income from your self-employed business. It cannot be based on your daytime employer income, in other words. It's got to be based on your self-employed business earned income. All right. Let's go ahead and pause here, and we'll come back and answer more questions as they come in. For now, we'll go ahead and again continue shooting over any questions you have, and we'll go ahead and pause, and then we'll answer those questions as they come in. But let's pause here and pick up again on today's main topic, which is, can I use the solo 401k to invest in real estate? And we've already answered the question at a high level that yes, you can invest a solo 401k in real estate, whether it's commercial, residential, even real estate syndicates, private equity. We talked about avoiding prohibited transaction regulations. Let's pick up there. So we already talked about some prohibited transaction examples. Let's also talk about how when a solo 401k invests in real estate like a rental property, the property is owned by the solo 401k plan. So that means title to that property on that deed is going to be taken in the name of the solo 401k. Let's say the name of your solo 401k is Palm Trees Retirement Trust. Let's say your name is John Doe. So title to that property would be taken as follows: John Doe, comma, trustee of Palm Trees Retirement Trust. That means that all the rental income is going to flow back to the solo 401k because the solo 401k owns the property. So that rental income goes back to the plan. It'll maintain its tax deferred status. You can then use those funds to invest in additional real estate or equities. A solo 401k plan from my solo 401k financial is robust. And not only can you invest in equities, but you can also invest in alternative investments, whether real estate, precious metals, cryptocurrency, tax liens, promissory notes, and so forth. Now, when that property is sold, just like the rental income flows back to the solo 401k plan, same thing with the proceeds from the sale of the property. They'll flow back to the solo 401k because the solo 401k is a tax shelter retirement plan. It's not going to trigger capital gain taxes when you sell that property, nor is it going to trigger any type of income tax as long as the proceeds flow back to the solo 401k plan. Then you can turn around and invest that solo 401k in additional real estate or any other type of allowed solo 401k investment under the regulations. Okay, let's pause there and take a look at some more questions and we'll come back. Again, please like today's video, subscribe to our channel to help get the word out to other solopreneurs like yourself. We've got a follow-up question here from Luke. You had a question about E-Trade earlier. It is not with your firm. I'm the employer and so employee. I set these up on my own with E-Trade. Okay, so I went ahead and answered your question already. If you use E-Trade's solo 401k plan, then you would work with E-Trade regarding doing the contributions and any type of reporting for conversions. They would need to issue the 1099-R. If you're a client of my solo 401k financial, then the answer I mentioned earlier would apply. And then we would handle the reporting for that conversion with the government. So good question. Okay, it looks like we've got a question here from Mark. Is there a limit to the amount of percentage of non-recourse debt that can be placed on a property that is owned by my solo 401k? Example, I buy or refinance a property with 100% financing. Good question. So let's first define what a non-recourse loan is, also known as debt financing. And this is actually one of the topics that we are covering on today's webinar, which is, can I use the solo 401k to invest in real estate? So let's jump to that. So a solo 401k can obtain a non-recourse loan. That's also known as debt financing. Non-recourse means a couple things. Number one, the loan is to the solo 401k plan. Therefore, the loan is not to you. It's to the plan. There are many banks and hard money lenders out there that do loan funds to retirement accounts, whether a self-directed IRA or a self-directed solo 401k. As a matter of fact, let me send over a list right now. There's a link on our website that has a list of those various lenders. We'll take a look at that. But when the loan is to the solo 401k plan, it's non-recourse, which means that in the event of default, that is, the solo 401k cannot make those payments. The only recourse the bank, or in the case of a hard money lender, will have is that particular property that was purchased with those borrowed funds. Now, when a solo 401k obtains debt financing, that is a non-recourse loan, most lenders will loan funds to the plan on a loan to value ratio of 60 to 70% of that property. Now, that loan will need to be paid back by the solo 401k plan, not by you. It's to the solo 401k, so it becomes a note payable, which means it's going to impact the Form 5500 easy reporting for the solo 401k. That's going to have to be reflected on that Form 5500 easy, which is an informational return for the plan. But not to get too much into the weeds. So when the non-recourse loan is performed, there's no credit check like a typical loan would result in, because the loan is to the plan. Now, the lender is going to want to make sure that the solo 401k is going to have enough liquid funds to make those note payments. That's why they don't loan based on 100%. So you usually do a loan to value ratio of 60 to 70%. So you're going to want to make sure that you have enough funds in that plan and to cover those future loan payments. Now, if you already have real estate inside a solo 401k plan and you're trying to purchase another property and you're trying to get a non-recourse loan, then that lender is going to take a look at the entire portfolio in your solo 401k. They're going to look at the liquid cash, the equities, the real estate, and they're going to take into account all those existing assets to determine whether or not they will loan funds on a non-recourse loan for investing in real estate. And those loan proceeds would be used towards the purchase of another property for the plan. All right, great question. Again, go ahead and shoot over any questions you have, and we'll pause and answer those as they come in. Oh, I don't see any other questions for now. Let's come back to today's topic, which again is, can I use a solo 401k to invest in real estate? Let's pick up where we left off. So we kind of skipped around. We skipped around to debt financing, non-recourse lending, because we had some individuals ask about that. But let's talk about the difference between using a self-directed custodian versus a checkbook solo 401k plan. Now, most individuals out there, when they open a solo 401k plan, one, they make sure they open it with a solo 401k provider whose plan allows for investing in real estate, because not all solo 401k providers allow for investing in real estate. Traditional providers do not allow for investing in real estate. Those traditional providers are the Fidelities and Schwabs of the world, as well as Chase Bank and other traditional financial institutions. So that's number one. Then when you go to open a solo 401k plan, you have to determine, okay, do I want to open one that has checkbook control? Or do I want to open one up with a self-directed trust company who offers self-directed solo 401k plans as well, but they do not come with checkbook control? The ones that do not come with checkbook, aka wire control, are typical trust companies whereby they actually hold on to the cash for the plan and they hold on to the real estate documents, the recorded deed, for example. That you also have to have them process transactions. Let's say you want to invest in real estate. The self-directed trust company will be the one that sends the cash out. Also, title to that property is going to be taken in the name of the self-directed trust company for the benefit of your solo 401k. Oftentimes, they may charge more fees like transaction fees, holding fees. Now, with the checkbook solo 401k, aka wire control solo 401k, which really means that you have complete control over the retirement plan, including being able to choose where to hold the money at. You can choose to hold the money for that solo 401k plan, for example, at your local bank. It can even be held at a brokerage firm like Fidelity. Yes, you heard that right. Fidelity or Schwab will provide brokerage accounts with checkbook control for a self-directed solo 401k plan offered by a company like my solo 401k Financial. They will do that because they know that they are not responsible for the plan, rather my solo 401k Financial is. My solo 401k Financial is the one that will work with the trustee of the solo 401k plan and performing the necessary compliance requirements, whether it's Form 1099-R reporting, plan updates, Form 5500 easy reporting. And my solo 401k Financial also handles the complex questions surrounding the solo 401k plan, whether it's contributions, distributions, investments like real estate. So that's one of the big differences between a solo 401k offered by a self-directed trust company and one offered by a checkbook solo 401k provider like my solo 401k Financial. Second is that title to the real estate is going to be taken in the name of your solo 401k plan. That's different. Whereas with the trust company is going to take title to that property for the benefit of your solo 401k. So that means you're going to be further intertwined with that trust company. What happens if that trust company runs into liquidity issues and goes under? So things like that can come into play. Whereas with the checkbook solo 401k, title is in the name of the solo 401k. And you get to choose where to hold the money at. Another difference with a checkbook, aka wire control solo 401k versus a solo 401k offered by a trust, self-directed trust company, is that it's usually less expensive with a solo 401k with checkbook control. Why? Because the funds are held at your local bank or at a brokerage firm, not that trust company. Second, the recorded documents for that investment are held by you as the trustee of the plan. So there are no holding fees. Third, you don't have to pay transaction fees because it's through the funds are held at your bank or at Fidelity if you use a brokerage firm like Fidelity or Schwab. Whereas the trust company typically charges transaction fees. Another big difference from a setup perspective is that with the solo 401k for my solo 401k Financial, it comes with the auto contribution credit of $1,500, which is effectively a way of the government to subsidize your retirement account fees for many years to come because they want to get individuals to save for retirement. So it's a $1,500 auto contribution credit, and not all solo 401k with checkbook control provide that type of plan. Well, my solo 401k Financial does. The way that auto contribution credit works is that one, you don't have to contribute to the plan in order to qualify. You can contribute in whatever amount you want up to the overall limit, depending on your self-employment income. Second, it's $500 per year for 3 consecutive years for a total of $1,500. So if you open a solo 401k plan here in 2025 with my solo 401k Financial, you're going to get a $500 credit, and you're going to get that, or you're going to claim that by filing Form 8881 with the government. You're going to get a second $500 credit in 2026. So you'll file a second Form 8881 for tax year 2026, and the third and final amount of $500 for 2027. So you'll file a final Form 8881 with your 2027 tax return. So those are the differences between a checkbook control solo 401k versus a self-directed solo 401k offered by a trust company. All right. So let's continue here. Again, go ahead and answer your questions as they come in. Or, excuse me, ask your questions as they come in, and we'll answer them as they come in. All right. So, yes, you can certainly invest a solo 401k in real estate, whether it's an all cash purchase or you can utilize debt financing, which we talked about at large already. Now, let's talk a little bit more about the different solo 401k real estate purchase methods. One method is an all cash purchase. That means you have enough cash in your solo 401k to invest in real estate. So the solo 401k owns the real estate outright. It's an all cash purchase. A second method is debt financing, where the solo 401k obtains a non recourse loan. And that's how the solo 401k gets additional funds to invest in a particular property. And we have a good section on our website that talks about the real estate purchase methods. Let me share that link with you here as well. Give me a moment here. I'll share that with you because we're just going over the purchase methods of investing in real estate through a solo 401k at a high level. But you can get more in-depth information from our website as well. I'll just share that link there. Another method of investing a solo 401k in real estate is through what's called a tenancy in common. That's where the solo 401k partners with another investor to invest in real estate. So title to that property is taken in the name of both the other investor and in the name of the solo 401k plan. So the expenses and the income is divided based on those ownership percentages. Keep in mind that when a solo 401k invests in real estate, not only does the income flow back to the solo 401k, same is true for covering expenses. Let's say there's a property tax bill due, and that's due by property owned by the solo 401k plan. That's got to be paid with funds from the solo 401k plan because the plan owns the property. Same thing with the tenants in common, where you have a solo 401k and another investor that partner up in the purchase of that property. Just like the expenses are divided based on the ownership percentages, same is true for the expenses. Those have to be divvied up based on, or they have to be paid for based on the ownership percentages of that property by both parties. You can actually invest in a solo, you can also invest a solo 401k in personal funds in the same property if you do it through tenants in common. Again, there are certain rules that come into play. We'll cover that topic in future daily webinars, but at a high level, when you partner with your solo 401k to invest in real estate, it has to be an all cash purchase, number one. Second, you can now utilize any type of debt financing. All the rental income and expenses are divvied up according to the ownership percentages. Title to that property would be taken in your personal name, as well as the name of the solo 401k. We have some good information on our website that talks about investing in a solo 401k and tenancy in common, where you partner with your own solo 401k because you have to follow certain regulations so it does not trigger a prohibited transaction. All right, and again, you can open a solo 401k plan once you're ready to invest in alternative investments like real estate. You just need to make sure that you are eligible. To be eligible to open a solo 401k plan, you have to be self-employed. That is, you have to own a business where it's only you or your spouse as well. For example, it cannot employ any full-time non-W2 employees who work 1,000 hours or more. The self-employed entity type can be a sole proprietorship. Let's say you drive for Uber. That means you're a contractor. You get a 1099 NEC. So that means you're self-employed. You can also be an IT consultant as a contractor. You also may have your own LLC, taxes and S corporation. Let's say you are I don't know, it can be any type of profession, real estate developer. You have your own lawn care business. You have your own side gig, so you can participate in a solo 401k if you're moonlighting and have your own self-employed business, even if you already participate in your daytime employer 401k through that employer, you can still open a solo 401k for your side business. You can even maximize your voluntary after-tax solo 401k contributions to that solo 401k, even if you contribute to a daytime employer 401k. So if you have a side business, let's say it's an S corp tax, let's say it's an LLC or an S corp. Let's say the LLC is taxed as an S corp. If you make at least 70,000 of W-2 wages from that side business S corp, you can contribute that entire 70,000 to the solo 401k voluntary after tax solo 401k, and then convert it to the Roth solo 401k as part of the mega backdoor Roth solo 401k. And that's true even if you also already maximize or make contributions to your daytime employer 401k. So that's something that we have a lot of attorneys and medical doctors that contribute to a daytime employer 401k already, but they also have a side business and they really supercharge that Roth solo 401k by doing that mega backdoor Roth solo 401k because it's not impacted by the contributions to their daytime employer 401k. So once you're eligible to open a solo 401k, you'll want to make sure you use a provider like my solo 401k financial, who provides a solo 401k plan with all the bells and whistles like the auto contribution credit, allowing for investing in real estate, the mega backdoor, loans, and so forth. It can also be invested in equities. It typically gets set up pretty quickly. You get to choose where to hold the money at. So that's one of the great things about a checkbook solo 401k. You're the one that chooses where to hold the money at. All right. So again, please subscribe to our channel so you can get more notifications like this. Please like today's video. We're coming to the end of our session here. It looks like we got another question coming in here. From Phil. Opening new bank account, check or saving or CD plan provider is my solo 401k financial. If two accounts are already funded in Schwab and we are looking to open a CD and Schwab to keep the cash earning better interest, do we contact Schwab directly to open the account? Or do we start the process with my solo 401k financial? So if you already have the brokerage accounts at Schwab for the solo 401k provided by my solo 401k financial, then you can invest in CDs directly through that Schwab brokerage account. I'm going to send over a link that talks about that. Now, if you do not have a Schwab brokerage account, also known as a company retirement brokerage account, under the solo 401k offered by my solo 401k financial, submit a support ticket and we'll gladly prepare those Schwab brokerage forms for you so that it can be open, and then you can invest at solo 401k brokerage account directly in CDs through that Schwab. Same is true with Fidelity. I'm trying to locate the link from our website that talks about investing in CDs. Here's one for Fidelity. I know you're talking about Schwab directly, but I know that it can be done at Schwab as well because we've had clients do it. And you can actually, if you already have that brokerage account for the solo 401k offered by my solo 401k financial at Schwab, once you log in, you can search for various CDs. Schwab has hundreds of CDs that can be invested in through that solo 401k. Same thing with Fidelity. I know we've got a post out there on our website about Fidelity. There should be one about Schwab as well, but it's easy. You just need to log into that Schwab company retirement brokerage account for the solo 401k, and you'll be able to invest in CDs. You can also do it through a bank account in the name of the solo 401k plan. It would be the same concept. The bank account would be in the name of the solo 401k plan, and then you would invest in CDs through that solo 401k bank account. All right. Let's see here. Let me know if you have any other questions. We've pretty much have come. Here's the information about investing in a CD as well. We've pretty much come to the end of our time today. Again, please like this video, subscribe to our YouTube channel, help get the word out to other solopreneurs like yourselves. Until next time, have a good rest of the day.